Hey Fidelity Fortune Hunters, it's Tom Wilmot. In this video, we're going to review three things. Number one, we're going to show this particular template that I've created that's drawn from my work in the Forex and currency markets. But it really moves over well into the Active Trader Pro platform. You don't need any more indicators than what you've got. So that's a bonus for Fidelity. I'm going to show you about those indicators just as a quick review, how to get around the screen a bit just as a quick review. The second thing we're going to do is talk about where you might want to enter and how you can enter. And in particular, I want to show you about how to use the Fibonacci retracement tool in the drawing menu. And then if we have time, and it doesn't go too long, I'd like to show you how you might take a setup in this particular environment and how to do that with an options trade. So if that's of interest, hold on to your hat and we'll be right back. Okay, friends, I told you that we would try to accomplish three things in this video. The first is to share with you the components of this template that I call Rejection, and I'll tell you why that's the title in just a minute. But bottom line, what you see on the chart in Fidelity Active Trader Pro is the SPX. I'm using a 195-minute chart right here. That means there are 2 candles or price bars per session. We have quite a long history in here now, going all the way back really to the 13th of January of 2022, and by the way, we're recording this on May the 12th, which is a Thursday, and that's in the spring of 2022, and we've had the Federal Reserve busy at work raising interest rates, and as a result, we've had a rather big market catastrophe since the most recent high that was reached back here in the March time frame. Okay, first indicator. First of all, the indicator here is the RSI. If you wanted to modify the colors or the settings, you could click on that down arrow. There you could modify, delete, add indicator. I don't want to delete it. I'll keep it in to show you how I use it. But bottom line is this is a middle section from 45 being the oversold area to 55 overbought. And you can see here that if it's in the middle, you want to wait until you get some kind of rejection in order to get short. Now, the situation here on the 195-minute chart is also that we have our 12, 16, 20, and 24 EMAs. These are seen right above here, and you could modify or change the colors on any of those or delete them if you wanted fewer. And then in addition, I've gone to an indicator that we haven't used before. It's way over here on the right-hand side of the screen, the Wilder moving average, and it is a smooth moving average. In Forex, I use the T3 Tilson, but in this particular case, the Wilder is great. I've obviously added a second one. That's why the color's a little weird here. So let's go and delete that one. And we'll come back and we have a 24 period. You can see here a 24 period Wells Wilder. Now notice that as we came down in the January time frame and then when it came back up, we'd established a downtrend as all of our moving averages are to the downside. We're below the Wells Wilder. We have ourselves below here. We come back up and test a couple of times, but each one of these rejections takes us lower until we build a little base, and then we go up and test the Wells Wilder again. We never are able to get our moving averages really going strong to the north, and they never challenge the Wilder. So one of the ways you can test your changes in trend is with a crossover of the 12-24 bands, as well as a crossover of those bands to the upside. And so here I probably would wait for a pullback like this one here, and you can see we come back and we we really kind of nudged that 60 level on the RSI, and then we have a rejection, and we close the next bar above the open of the down bar. So that's a pretty good sign. Maybe you're going to go up. And once again, these are 2 bars to a day. So this is a 3-day period that you could count on. And so if you're doing some options, even if you don't have a $25,000 account so you can do day trading, you can take a trade in this area and on a weekly options chart, for example, or a monthly options chart, and you can stay with the program for your 24 to 48 hours so that you're not getting into day trading trouble with your broker. Okay, so once again, the idea is if you come into the bands and you test, you can see here we came in and then we stalled and went back down. Once again, if you have a stop loss below here, or if you see this bar and you're just not confident, you can get out of the trade at that point. There's no point to being a brave soldier with an arrow in your back. So as a result of that, certainly you want to see here, depending upon your length of patience, whether you want to take this out now that we've twisted to the downside with our moving averages and we're down here. It's not looking good, and obviously we now have lower highs, lower lows, lower highs, and off we go to the downside. Now, one other thing I haven't talked about today is our history viewer down here. If you'd like to adjust the number of candles on your chart, you can click on this down bar here to either turn it on or turn it off. Then you can adjust it by grabbing this right here and either moving out or moving in. And this way we can now focus on this recent period. And I'd like to show you next about 2 more strategies. I mentioned 3 things. First was a template, then when to enter and when not to. I would say that the next thing is to talk about rejection as our number 2 point for the video. Here was clearly rejection. We had a downtrend. We're down below the Wilder. We come up and we have this rejection session. We have at least a day and a half of problems breaking through, and then it falls off. And so from here down to here is a pretty nice trade over the next 2 or 3 days. Once again, we pull into the bands, but we do not stay with it. We come back down. Obviously, this was a magnificent entry here to come up and challenge the Wells Wilder, and then this rejection is mammoth. This was on the 4th of May. The 4th of May. And we closed here in the afternoon, and then the next day on the 5th we had this downward rush. And so that was probably around the time of the Fed announcements about interest rates. Now, when you get into this situation, you have a potential to put your stop in this area here. You don't want to take out this high. You don't want to go above the 24. Notice that this was confirmed by coming into the RSI bands and then falling off to the downside. So everything was looking up for us at that time. Okay, the second final thing I would like to share with you about the second when to enter and what should your targets be. I'd like to share some Fibonacci observations with you. You go to this particular drawing tool right here, and then you click on the chart, and you go from low to high. And this is one thing about Fidelity that kills me. You can't have default colors. You have to go with theirs. It's ridiculous. It's a cheesy charting system. But anyway, here we go. I'm going to change it to yellow. I'm going to snap to price right here. And now we'll be in a position where we can adjust this exactly to where we want it. And now I'd like to show you if we apply, we'll be here. Notice that we came up. We came back into our bands. Oops, I forgot to do one thing I always do, and that is to get rid of removing a selected value, which the 23 is too busy. It makes my chart too busy. Here's my bands in the middle, 50%, 38, and 61.8. So now we see we came down to the 50%. We could not get going again. We had the lower lows and lower highs. And so now when we fall back down through with this rejection, we go all the way down very rapidly to the 100% where we began our journey in the first place. And that begs the question of what's our next target. Here was our next rejection to take us back down. What should we be looking for at this point? Well, let's come back here and let's take one of our Fibonacci favorites. We're going to put in the 161.8, and we're going to add that value. And then we're going to apply, and I don't want you to think I'm a genius. I didn't invent Fibonacci, and I can't explain why it works. But look at how we touched off today. Once again, this is the 12th of May. It's a Thursday, and we came down in the morning session, ending around noontime East Coast, and then we had that we had a pullback. We had a flush all the way down here to this area. While I was watching it here at noontime and into the 2 o'clock hour and home nursing a cold, and this is the area where you could expect a bounce. So when I say catch a falling knife, there is going to be a pullback. I can't obviously guarantee you're going to have another changeover in trend like this one, but obviously right here, we could conceivably move ourselves back into the bands. And even at the end of the day, we had a significant pullback because we ended up the day down 510, and we were at 70 points lower at the 2 o'clock mark in the session right after that last flush. Okay, so now what I would like to show you is that it's possible also to see that more in depth too. Let me show you how that happens. If you move to your settings, I have done some things here in terms of candlesticks up and down, opacity and so forth. But if you don't take settings, if you take your chart here, I've saved some other ones. If we were to take the 39-minute MMA hot, let's go to a 39-minute chart, and I can show you about those flushes. Let's see what happens here. Now what we're going to have to do is make some adjustments so you can see it more clearly. Obviously, we don't want that many candles. Notice what I was telling you about the flushes here in the 2 o'clock hour this afternoon. Here we came back up into the bands here in this particular thing. This is just an abbreviated version of what I was showing you before. Now we've come down and we got that brilliant bounce down here. And if you're a day trader, that's good for, that was good for some 30 points on the SPX. And if you're looking to do something more conservative, you could very well do what we're going to show you you could do next. And that is the following. I'm going to now go over to our tools in use, and I'm going to show you the SPX vertical chain. By doing that, you could go also up here to the options and get an options chain. And then what I've done is gone to the vertical. I don't, calls and puts are here, calls and puts, but I went down low to the vertical spread. And so here we were, and we were looking at it here in this area where it was 38.55, 38.60, and in fact, this option priced out at $3 in the mid today, about $2.15, and so now we've lost $2 just in that period of time. And it's conceivable if you'd gotten in and taken that put credit spread here at the $3 mark down at the Fibonacci level, hoping for the bounce, you'd have been in a situation on a 5-wide spread where you were risking 200 to make 300 if it can stay above this level just through the close tomorrow, May 13th. And of course, if you're trading during the day, you could be watching it and just take your profits in the morning, even if you're not a $25,000 account holder. So boys and girls, I hope that's helpful to you. Please leave some comments down below. If you have any questions, let me know. I'll try to get back at this again with another video over the weekend to suggest how it all turned out. And I'll show you one last thing before we go. I'm first of all going to go back to the 195-minute chart. Here we're going to try to apply it. I'm going to see if I can do it up here better. This one here. Here was our move. And what I'd like to show you now, because that is too many candles, and then we'll stop. Here we go. Even too many candles now. If you were to go to your Fibonacci and you were to say, I think the selling is going to continue, what could you do next to find the next target? And here we go. And that target could be easily changed, and you can see how annoying this is to have to go back over your colors and everything else again, but we'll do it because we love Fidelity. Here we go. We would like to now add the 200 value instead of the 1618. We're going to apply it, and I'm going to show you what the target value might be if this horrible, relentless selling continues. It could take us all the way to 35.93. Okay, that's enough for this one. I hope you enjoyed it. Leave me a like. Please subscribe to the channel. Let me know if you have other questions or comments or like take a look at other things. If you do some practice on this yourself, I would suggest looking at the Qs. They had exactly the similar pattern today. I didn't have a chance to look at the Dow Jones or the ETF there, but you could check that one out as well. Hope it was worthwhile. Thanks again for watching. See you next time.